So my name is Nathalie Frost. I'm Senior IR Manager and I've been working for K plus S for 11 years now. I was responsible for the issuance of debt instruments and our US dollar hedging, and then changed positions internally 2 years ago to the investor relations team. I would like to start with some general comments on K plus S on our business model before elaborating on the current market situation. K plus S is a German mining company that is mainly extracting crude salt containing potassium chloride and sodium chloride with mining sites on 2 continents. That's Europe and North America. And this offers us logistical advantages and less operational dependencies. K plus S has more than 130 years of expertise in this area and uses this to prepare the company for the future. So we see ourselves as a pioneer for environmentally friendly and sustainable mining, but I will come to that point later as well. K plus S has about 11,000 employees, mostly in Europe. And in the first 9 months, EBITDA amounted to about 550 million euros. This is for sure significantly less than what we saw last year, where we did 2.4 billion euros in EBITDA. But this was also a record year for us. This is the highest EBITDA ever generated by K plus S. But the 550 this year is still a very good result for K plus S. We will have a look at the potash prices of last year later, because they were the main reason for this record year last year. When it comes to potassium chloride, the biggest part is used as a mineral fertilizer, the so-called MOP. In addition to that, we also offer a wide range of fertilizer specialties, for example, for crops that are chloride sensitive. And so in SOP, for example, the chloride part is replaced by sulfate, what makes it more valuable for those crops. And most of our products are certified for organic farming. As you can see, the major part of our revenues came from this agriculture customer segment, but prices are much more volatile here. So the sales volumes, on the other hand, they are nearly evenly split between the 2 customer segments, agriculture and industry plus. Besides high purity potassium chloride, the industry plus customer segment mainly sells sodium chloride. This can be used for food grade salt for households, for animal nutrition, and also in a high purity for several industrial applications. Like we just heard it, the oil drilling, water softening, pulp and paper, or electrolysis. And in the most highest purity, it is also used for pharmaceutical industries. And those applications also helped us during the COVID pandemic and might be of an advantage in case of a gas shortage or similar, as we support the food chain with our fertilizers and salt, and also offer those pharmaceutical salts. And we definitely see that the contact to politics is much better than it was before, and that there's also that they are much more open to get to know our business and the special circumstances that we have with mining in Germany. The long-term key drivers are probably very obvious. So the global population grows further, which means that there will be more and more people to be fed. By 2050, we will be nearly 10 billion people on the planet. And already now, more than 700 million are starving, and the tendency is still increasing. At the same time, the amount of arable land is decreasing. So the efficiency of agriculture needs to be improved. And even if the protein consumption in some developed countries decreased, the global consumption is still rising. So that means agriculture must become more efficient, while global warming, on the other hand, leads to more and more weather extremes. And potassium chloride makes the plants more resistant to those weather extremes, especially droughts, and it strengthens the roots and supports the efficient use of water. The law found by Liebig in the 1800s is still valid. So every plant needs 3 macronutrients. Those are nitrogen, phosphate, and potassium, the so-called N, P, and K. Every plant needs it in individual proportions, but all of them need to be available to the plant. And it is also not possible to somehow substitute one of them or so. And if you apply too much of one of them, the plant cannot make use of it. So it cannot make use of the excess amount as the specific balance between N, P, and K needs to be met. And Liebig compared this to such a barrel, as you can see it on the slide. And if there's a one wooden slat that is higher, it doesn't keep the water inside. So the water level, which is a symbol for the health of the plant, depends on the lowest wood. So it doesn't make sense to increase nitrogen if potash isn't high enough. Other than sodium chloride, so the usual salt, potassium is not available all over the globe. On this slide, you can see that the regional distribution of potash resources that are shown in the dark blue bars is very different to the areas where potash is needed for agriculture. So potash is mainly available in North America, in Europe, Russia, and China, whereas it is mainly sold to the South American and South Asian markets. So the main suppliers, of course, are located in Canada, which are Nutrien and Mosaic, in Russia, which is Ural, Kali, and Eurochem mainly. And we always used to be number 5 in this chart, but due to the sanctions against Belarus, as a consequence to the non-democratic elections and Lukashenko, Belarus Kali sold significantly less last year. And this is also not related to the Ukraine war at all. So it's really just, it was in place beforehand and just because of Lukashenko. And you can also see that also the volume of Ural Kali decreased last year. Regarding potash, Russia is not sanctioned, neither by the EU nor by the US, but they had big logistical issues after the start of the war in the Ukraine. So many shipping companies refused to do business with Russia as the risk was just too high that something happens while they're on the way, for example, to Brazil. So that they are not able to unload or that they're not getting paid. And in Europe, many customers still do not want to do business with them because they don't want to support Russia and thus they don't buy from Russian producers. Belarus and Russia together accounted for about 1/3 of the global potash supply. Last year, more than 10 million tons out of the 77 million tons market were missing in the market. And besides very good crop prices, this was the main reason why potash prices rocketed last year to more than $1,000 per ton in Brazil. And that was the reason why our EBITDA was at 2.5 billion. This year, we expect that still about 7 million tons are missing from those two countries. You can see the historic price development of MOP in Brazil in dark blue, which is the main or the most important reference market for potash prices. And in light blue, you can see historic soybean prices. Potash prices are highly correlated to crop prices as they determine the demand for fertilizers. And I just showed you the long-term key drivers for demand. But in the short term, farmers will only have an incentive to use fertilizers if their margins are high enough. And we saw a steep increase in prices in 2008, followed by a very strong decline as farmers didn't earn money anymore. And so they didn't care about their yield and didn't apply fertilizers. In 2020, the demand for potash met the maximum possible production volume. And together with the high crop prices, the price for MOP started to rise again to more than $500 per ton, compared to just above $250 per ton the years before. And this already was before any sanctions against Belarus or before the war in the Ukraine. After those sanctions and the reduced exports from Russia, the prices rose to even above $1,200 per ton in Brazil, which we always knew that it's not a healthy level and it will not sustain, but prices reacted like that. The price reaction was overdone beginning of 2021 and 22, but at the same time, also the price development in the opposite direction was overdone because at such high price levels, farmers stepped out of the market with less demand, then leading to slightly declining prices. And then after that, a wait and see attitude of farmers started, every week they saw that prices fell, waited another week so that they could buy at a lower price, and then saw lower prices and waited another week. So we have seen that in many regions over the second half of last year and at the beginning of this year. So that prices dropped to slightly above $300 per ton in Brazil in summer this year. But you can only skip potash application for 1 or 2 seasons, and only depending on the soil. Afterwards, farmers just risk their yield, and we also recognized the expected increase in demand in autumn this year. So from those low levels of $300 per ton, we already saw a first bottoming out and then rise in prices. And in Europe, prices even stabilized at around 400 euros per ton, so much higher, because there the share of Ural Kali and Belarus Kali, which was much higher. And even if prices came down compared to the peak prices, the situation is still very different to 2009, as farmers' profitability is still intact, and crop prices came down compared to the last 2 years, but at the same time, their input costs, like for energy, decreased as well. And so this keeps margins high and supporting the demand for fertilizers. In the mid to long term, the International Fertilizer Association, the IFA, forecasts an annual demand growth of about 2.5% for potash on average. On this slide, we plotted the demand growth against the expected capacity additions until the beginning of the 2030s. The biggest greenfield project is the Janssen project from BHP. With their stages 1 and 2, they will build mines with an annual capacity of 4 and 4.5 million tons. And even if BHP never built a potash mine before, we are convinced that they will be able to finish the project, but perhaps not at the earliest point in time that they announced. But they will probably be there and make it until the beginning of the 2030s, and that's why we included them here. Then we already spoke about the supply constraints of Belarus and Russia. And even if they will be back in the market with their normal production volumes in the next couple of years, their planned capacity additions will at least be postponed. In total, they announced around 11 million tons. We assumed here half of them to be in the market until 2032, but this might even be an optimistic view as they are not running at 100% production on their existing capacities at the moment. And then another about 6 million tons for several projects like the ramp up of our site in Canada or Mosaic or Laos. Compared with the growth in demand, those capacity additions would still mean that supply and demand is balanced. And it also shows that capacity additions are urgently needed to meet the rising demand. And the medium to long-term perspective is still very good. And I mean, there's always the risks that announced projects won't come on stream. So when we have a look at 2006, there were about 160 greenfield projects announced, of which only 3 are now, and now is more than 15 years later, are in the ramp-up phase. All the other projects are either on hold or cancelled at all. The 3 projects are first our Canadian mine, the project of Eurochem, and the project in Laos. And the legal framework, technical feasibility, the capex intensity, they all stop or block many greenfield projects. And this is also the reason why we didn't see new capacities in the last year when prices were above $1,000 per ton, because potash prices or potash projects take a lot of time and a lot of money to finalize them. Then just some short remarks to the current year. When we published our Q3 figures, we also confirmed our outlook for this year of 600 to 800 million euros in EBITDA and a free cash flow of 300 to 450 million euros. This is less than the record year last year, but as I said, it's still a very good figure for K+S. And yes, we are in a cyclical business and we are dependent on the agriculture cycle and potash prices, especially after we sold the American salt business 2 years ago. but the volatility does not need to be an issue. It's just very important to manage the business accordingly and to be aware of the cycles. So mid of November with our Q3 figures, we also announced our future distribution policy. As non-cash items may have a big impact on earnings, and we saw the impairments and reversals of impairments over the last years, we are convinced that free cash flow is a much better base for capital distribution. We will return 30 to 50% of the annual free cash flow in the form of a dividend, but it can also be combined with the share buyback in peak years like what we saw last year to mitigate large fluctuations in the dividend paid. The decision whether to distribute rather 30 or 50% is determined by the expected business development, by the expected capex, and also by the balance sheet structure. So we still strive to keep leverage ratios on net debt to EBITDA at 1.5 times at the maximum. And this also brings me to our strategy. As I said, the dependency on agriculture cycles, or as we are dependent, it is very important to manage the cycles and the business. We made a very good cash flow last year during the upper half of the cycle, but we also have to make sure that we do not burn any money at the bottom of the cycle. And therefore, we defined that 70% of the management focus, they shall be spent on optimizing our existing business. This includes the steady ramp up of Bethune in Canada, the improvement of our German sites. Only 20% are spent on the development of our core business, so the agriculture customer segment, by, for example, increasing our specialties portfolio, like for fertigation, which is the combination of watering and fertilization. But here we are talking mainly about partnerships, about joint ventures or offtake agreements, so no big M&A activities. And the remaining 10%, they are spent on projects to make use of our unique infrastructure, like the tailings piles we have or the caverns underground to store, for example, in the future, hydrogen there or to do underground farming. The biggest project to optimize the existing business in Germany is our Vera 2060 project. Here we are changing the operations from a wet processing of crude salt to a more dry processing. And thus we are able to reduce the solid and the liquid residues from production, and we are able to reduce our CO2 emissions, meaning that we are improving our environmental footprint and, on the other hand, also our cost position. So we are less dependent on further environmental permits for the extension of tailings piles or for discharging of salty waters. And this is only one step towards the net zero goal we have. As I said, we see ourselves as pioneers for environmentally friendly mining. And so we have very strict regulations in Germany regarding occupational safety and environment, especially in contrast to our Belarusian, Russian, and Chinese competitors. But we also go a step further and want to reach even more than that. So if we take a look at the CO2 emissions, we already did a lot to reduce them. Since 1990, CO2 emissions decreased by about 80% at K+S. While if you look at the German overall CO2 emissions, they were only decreased by 40%. So with our strategy, we also introduced our climate strategy. We continuously work on that, develop it further, but our midterm goal is to decrease 10% of CO2 emissions by 2030. And we also have a path to net zero in the long term, of course, but there are many things we are already striving forward. And we are also using it, the energy we need or the natural gas we have as a source of energy. And this is very different to the producers of nitrogen, for example, where it's an input factor, where we can easily switch to green power or any other source of energy. And so this is also the main driver for our climate strategy, to use green power in our production process. On the other hand, this also makes us more independent. Last winter, for example, when the availability of natural gas was at risk, because then we would have been able to switch energy sources short term at some of our German sites. And we are also contributing to the SDGs. So number 2, zero hunger, is probably the most obvious one, but we are also, with the improvements in our production process and our high purity salts, we are also supporting further SDGs. The products in the pharmaceutical sector, for example, they are carriers for vaccines or for medicine. And we also have 2 female board members. So we already reached gender equality in our board of executive directors, just to mention a couple of those SDGs. Yeah, so this was a very short overview of our business, and now I'm open for your questions.
Thank you very much. Excellent presentation. There's already one question in the chat, but everyone else is open to ask more questions. So first of all, aren't there perhaps other metals found in the salt deposit that can be used in other areas such as lithium or rare earth? Are there any studies on this?
So there are, but in a very small extent. So at the moment, it's not possible to use them economically. There are some other nutrients like magnesium, for example, that are part of our specialty products. And we are the only one. I mentioned the SOP, so the potassium sulfate, and we are the only ones having those products in the ground in the crude salt, so we can easily extract them, while our competitors, they need to use a very complicated and environmentally unfriendly process to produce it synthetically from MOP and some other things. So we have it in the crude salt, but nothing like lithium that is worth mentioning, or that might be a possibility for the future.
Okay. And in the 9 months figures, it showed some downturn. Could you maybe share some insights into the strategic initiatives that K+S has in place to improve profitability and operational efficiency in the current business environment?
Sure. So as I said, earnings are very volatile and always depending on the potash price or the agriculture cycle. And even if there's a negative development in earnings compared to last year, but this was really an extraordinary year, a record year for us. This is nothing to compare the current earnings with, the 550 in the first 9 months. This was a very good result for us in the strategy, and also for the German sites. We have many projects how to improve our cost position. We have the ramp up in Bethune, so our Canadian mine, where we are steadily increasing our production by 100 to 150,000 tons per year. Currently, we have around 2 million tons there, but we are able to produce up to 4 million tons. So this is the growth, or the biggest growth story for K+S, but also at the German sites. With, for example, the Vera 2060 project I mentioned, we have many initiatives to reduce the costs by changing the production process.
Mm-hmm. And another question from the chat, is there an option to acquire a junior mining company, or are there any other attractive projects? So maybe more in general, is there an M&A strategy in place, and how does it look like?
So in terms of growing the existing business, we really are focusing on joint ventures with other companies. As I said, no big M&A activities. We just finished our Bethune project in Canada and are now in the ramp up phase. We had a very high leverage some years ago, and we did a lot to improve it. We sold our America salt business to improve leverage. We also had the very good earnings last year, and we really want to keep this balance sheet structure as it is. So the leverage below or at around 1.5 times EBITDA. So we will probably not invest in any big companies in the future. If there are some possibilities, then rather in the specialties portfolio, but those are really very small companies we are talking about.
And in light of the recovery in potash prices in Brazil, how has K+S strategically positioned itself to capitalize on market trends and strengthen its market presence?
So our advantage is that even if we are a big producer with a market share of 10%, we are still small enough to being able to act or go to the regions with the biggest or highest netbacks. And this at the moment is Europe. So with the missing volumes from Belarus and Russia, we have a very high market share here in Europe. It supports the prices. There's also one competitor located in Israel, where the potash volumes were at risk. It seems like they are able to produce their normal volumes, but we will have to wait how this will develop in the next months. So the best market really at the moment is Europe. So we are increasing the volumes here and reducing them in other regions where the netbacks are lower, like in Southeast Asia at the moment. And so this is our advantage, that also in the future we can always choose the regions with the biggest advantage for us. But of course, we have very long-term relationships with our customers, and so we will never say we won't supply Brazil at all. So we will always ship some tonnages there. But at the moment, the focus really is on Europe with the biggest advantages for us.
Yeah. And how does K+S plan to balance the distribution of annual adjusted free cash flow to shareholders through dividends and share buybacks?
So in normal years, you should only expect a dividend. The figures might just be too small to combine it with the share buyback. It just doesn't make sense to say we distribute 50 cents and we divide it by 2 and do a share buyback in the volume of 25 cents per share. So this is really something for peak years like last year, where we have such a high free cash flow that it really makes sense to divide it into dividend and share buybacks. But in all normal years during the cycle, in the mid of the cycle or at the bottom of the cycle, those are mainly dividends that will be distributed.
Okay. And can you elaborate on the factors driving the expectations of the moderate to significant increase in the average annual price for agricultural customer segment, and how does it contribute to the overall revenue projections for 2023?
So this year, as we started into the year with very good prices for the agriculture segment, the share of agriculture business segment is much higher than probably in the next years. So also our Industry Plus segment is doing very well. So prices for sodium chloride rose as well over the last couple of months, either because of higher energy prices and changes to the contracts. So the main driver for sure is the potash price. And there we saw the first recovery in prices. We are now in between seasons, so between the autumn season and the next application season in spring. And so we just have to wait how the pre-fill season for the spring season will go. It looks everything very good, but we really have to wait how this will develop. Also depending on the weather, of course, whether this will be still this year or then beginning of January.
Okay, excellent. Looking at the time, we just have 15 seconds left, so I think not enough time for another question. Thank you very much for the great presentation.
Thank you.